Good morning, everyone, and welcome to the European crossover webinar. And we have seen equity markets whip back to the upside. That we saw quite a bit of downside action yesterday, and then a move back up in Asia, then a move back down. But from what I see here, there's been some talk about airlines making a stand on how they're going to go on and come back, or expect to go on and come back. And that's kind of brought things back that we've seen. It mentioned here that the death toll has come down a bit in Spain and Italy, or at least it says it has eased a bit. And also a note from airlines regarding how they expect flights to people to come back in droves as they look for destinations. So that's what's actually has pushed this market back. And we've seen a pretty good pullback. We'll go and take a look. The market gave you an opportunity to get back in again, and we pulled off of that. So I'm not sure to what extent people would be in trouble in positions. We'd already come off quite a bit. Yesterday came back up again and late in the session, and then gave people an opportunity to get short again. So I'm not sure to what extent that would really put them in. You could say we have people in trouble right now. And then with the expected jobless claims will be due out later on today, I would think that would probably keep this market under pressure. We have seen NASDAQ try to make a step back. Certainly closing above this area was helpful right here. Especially right there. So it's giving it a little bit of extra juice here, at least as far as NASDAQ goes. 1 moment. Right there. And you can even see where it took that dip and then moved even higher. So I guess the challenge, if they want to do just that, there we go, would be to try and make it up to this level. Which would be 87.05. Actually, it's just a hair higher, 87.09. They've come up a little bit short to find out whether or not we can make that one last push here. And with SPOOs, it'd be if we could challenge that 2809 area one more time, which we actually came up pretty close, 2805. So that'll be key in the NAS if we make that one more push. Although we came pretty close. There we go. Taking a look, we'll go and take a quick look at crude oil. And that still continues to remain below $20, although it's tightened up a bit. trading essentially what about a 60-cent range. Well, a little bit more than that, maybe about a 70-cent range, but relatively tight. And then gold has bounced back and made a run back up here, although we got a little bit of a resistance coming in just around the mid 1760s. Coming into today, we did get German CPI data, as well as coming up at the top of the hour will be Eurozone industrial production. And then as we come into the States, of course, we have jobless claims. They're looking for 5.1 million. Last week was 6.6. Have building permit and housing starts at 8:30 Eastern as well, along with Philly Business Index. And Canadian manufacturing sales. With that, let's go and move into FX. And we'll look at the news. Australian and New Zealand dollars suffer setback and jobs data throws a head fake. The Australian and New Zealand dollars were under pressure on Thursday as evidence of the damage of the novel coronavirus was weakening on the world economy, soured risk sentiment, unraveling a chunk of the recent gains. The Aussie had backtracked to 62.89, having fallen 1.9% overnight, and away from the 5-week top of 64.45. The Kiwi retreated to 59.61, shedding 1.8% overnight. The relapse came after U.S. data showed a record drop in retail sales for March and the sharpest decline in industrial output in 70 years. The figures underline just how much damage has already been done by the virus, tempering optimism that a slowdown in infections could allow some countries to steadily reopen. Domestic data caused some confusion as Australian employment was reported to have risen 5,900 in March, when analysts tipped a fall of 40,000. The Aussie initially rose on the bad news, but turned tail when it became clear the data covered only the first 2 weeks of March before the antivirus lockdown really took effect. As such, these figures are likely to deteriorate sharply in April, where we expect a large rise in unemployment, while we forecast to reach 11.7%, 11.75 by mid-year. Widespread reports of workers being stood down and hours being cut as businesses grapple with a sharp pullback in demand for their goods and services should result in a collapse in hours worked and a rise in unemployment. And the dollar extends gains as U.S. sales retail sparks flight to safety. A flight to safety bid pushed the dollar higher against its peers on Thursday after dire retail and factory data showed the severity of the collapse in U.S. economic activity caused by the novel coronavirus outbreak. The dollar rose to 99.83 against a basket of 6 other major currencies. The euro dropped to 108.81 off its 2-week high of 09.80 hit in the previous session. The pound fell to 24.82. The dollar is maintaining its momentum following U.S. data yesterday, said Kashizuki Kaida, head of foreign exchange in Tokyo. But the main player in the market now is the short-term leverage accounts of or what they call hot money. It's like a lot of investors are taking part in this. U.S. data showing retail sales fell 8.7% in March, the biggest decline since tracking began in 1992. Underlying fears that the damage to the economy and the virus outbreak will be deep and protracted. Separately, a report from the Federal Reserve showed manufacturing output plummeted 6.3% last month, the biggest decrease since February of 46. The New York Federal Reserve was also reported that its Empire Manufacturing Index, which tracks activities in the sector for New York State, fell to an all-time low. The grim numbers poured cold water on recent improvements in market sentiments and hopes the outbreak may be nearing its peak. Many developed countries look to reopening economies as soon as next month. Given the scale and breadth of the U.S. shutdown, our best guess is the economy contracts by around 13%, peak to trough, before we start seeing a rolling process of reopening in the U.S. from mid-May. This will involve some ongoing from a social distancing, meaning a return from business as usual. Could take months. We don't expect lost output to be fully recovered until 2022. The death toll for the coronavirus approached 31,000 as Wednesday, as governors began cautiously preparing Americans for the post-virus life. Governors of about 20 U.S. states where the pandemic has had a slow impact believe they may be ready to start the process of reopening their economies, and President Trump's May 1 target date, but a labor union chief has warned against reopening before making sure it is safe. The Aussie had fallen 4/10, reversing earlier gains, and New Zealand fallen 6/10 after Reserve Bank of New England Governor Adrian Orr said negative interest rates were not off the table in the response to an economic fallout of the coronavirus. Plunging crude oil prices has weighed heavily on oil-producing countries. So with that, let's go and move into the analysis. So the euro closed the day with a dark cloud cover, and you can see that right here. Now, looking at the body, if it would engulf the entire body, it would have been a bearish engulfing, but in this case, it's a dark cloud cover, which will cover at least for more than half of the previous day's body, okay? With an initial target of 829 and resistance at 933. So support today, we're going to be looking for 829 as a target. Whether we get there today or not, maybe not until tomorrow, but that's what they're looking for. And resistance will be 933. Onward to cable. Now, cable paired back with a dark cloud cover also, you can see that. It's almost a similar setup as a euro. Support for Thursday will be 23.92. Well, one of the good things, today we're trading in a very tight range. I thought we might press a little bit lower here. They haven't yet. Support will be 23.92 with resistance at 25.53. So pretty tight range for cable today so far. On to the Aussie dollar. Now, the Aussie closed Wednesday with a bearish engulfing bar that took out the prior 3 days' ranges. You see it right here. The pair will target 62.07 with resistance at 63.48. Still a tight day, just like in the cable. So 62.07, 63.48. Onto the Kiwi. Now, the Kiwi closed Wednesday with a bearish engulfing bar that took out the prior 4 days ranges. You can see we had these two spinning tops here. Basically, this was essentially a spinning top also before we came down here and looked the past 4 days right here. The pair will now target 59.14. There's that key level, the 59.14. That's what they're looking to target with resistance at 60.32. Moving on to the dollar CAD. The dollar CAD rebounded, challenging 41.36. Resistance for Thursday will be 41.60. So we're not giving it a whole lot of room here, allowing it to come back up to 41.60. But once again, we've already had a little run here, and you can see here in the Asian session, they haven't even added much to it. I mean, it's as tight as the range has been for cable. The range is even tighter, and also the range is even tighter here for dollar CAD. But it's going to be, we're looking for 41.60 with support at 40.11. And on to the dollar peso. So the dollar peso further gains on Wednesday. Resistance will be 24.62. That's that level up here. Look what, I mean, there's still a opportunity we could push higher, but obviously with equity so strong, you can see where they paired back. But resistance would be that key pink level here, which is 24.62, with support at 24 even. We're actually just a little bit lower. I mean, we do have equities pushing higher. I think we might be able to push a little bit higher in equities. I think that at least for SPOOs, they could get up to 28.09 maybe. I think that that's going to be a level that they want to try and go for, especially if the NASDAQ 28.09 was that key level before we came up to 28.05 today. I think that's where they can push it to. That may allow this to push back a little bit further. So I'll tell you what, we're just going to put support right there, the high here, and that's going to be 23.85. So 23.85 for support. And let's go move on to the dollar yen. One thing that you'll notice over the past few weeks is I'm not making any reference to this central bank, that whatever these cases, whatever. I'm just sticking to the levels because you can see the way these markets are whipping back. The markets don't care what we'll give some news because the news gives us, we'll cover the news to give some sort of narrative for the session ahead, meaning the session that we're in. But I'm not focusing on the news. Well, they're going to do this, they're going to do that. These markets are moving too fast. I mean, it's all about the levels. Matter of fact, if you get into position, which they say, you got to have an area where you know you're wrong. And that's going to be based on a level, not based on whatever they're looking at. They're going to propose this. They're going to go in and propose that. So once again, like I said, that's why, I mean, the analysis is going rather quickly because we're not, other than covering some news for the day to, give us an idea of what's the push or the narrative for that session. That's what we'll cover the news. We cover the news for to give us a flavor. But as far as okay, they're going to do this or do that, and we may see this as we've done in the past. You can see here the analysis is short and focused only on the levels, because the levels are all that's going to go and matter as to where the market may target or pull back. I mean, obviously that's been the case before, but moves would take their time, and now you see these moves transpire very fast, and the markets move to these levels sometimes almost as a magnet, and then turn around, they either blow past that or revert back, and that's all we're doing. Obviously the bias chart is set up for short-term levels to go to, and news is not providing, other than what's the theme or the narrative for that morning, is not giving you a whole uh, focus on what an expected move is. You're seeing these moves just jump up and down, and then they get to a level, and then you see the markets retreat back. So that's why, like I said, the analysis has been rather quick, and you'll see I have no reference to, okay, the Bank of Japan is doing this, and the meeting is going to be coming up, and they're thinking they're going to. There's no time for any of that. It's just the levels. That's what we got to focus on. So the dollar yen came off the lows, challenging 778. Once again, a level. You see that? You can see here, look, as a matter of fact, what was yesterday's resistance? Yesterday's resistance was 778. I didn't even think about it, just looking. Case in point, look, yesterday's resistance was 778. That was a high. Where did the market go to? The market went to, the high was 789. Okay, took it out by what? 11 pips. But where did the market close at? Market closed at 741. So it closed 37 pips lower than what the resistance was. And sure enough, there was that level. And that underlines what I just covered. It's all about the levels. So why I'm not saying, well, the Bank of Japan is expected to do this and they get this plan, this might happen, and the tin can sales were BS to that stuff. It's all about the levels right now in this environment. So dollar yen came off the lows, challenging 778. Resistance for Thursday will be 828. You can see we've added on here. So far today, the high's been 809. Resistance will be 828 with support at 722 in case they pull back. Let's go move on to the cash dollar index. The dollar index rebounded on Wednesday, challenging 100. Resistance on Thursday will be par 20. So far the high has been, well, par 01. So it hasn't pushed too much further. But once again, the high has been right there, par 01. So we got resistance of par 20, and support's going to be 99.38. Yeah, one of the things, and just to go back to that same, get on my soapbox. Yesterday we saw the SPOOs come under a lot of pressure, and once again, retail sales the worst since '92 or whatever the case may be, or since they've been recorded since 1992, as far as the drop. So boom, 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 they're offering SPOOs like crazy. Now we come in today and like, what happened? Now we see SPOOs at higher highs than yesterday, and from yesterday's action. But once again, they're chasing the narrative for today. Oh, well, the airlines are saying that this is going to happen. It's going to be great. Once the coronavirus shuts down, there's going to be a lot of demand for destination locations. We're seeing Italy and Spain kind of pare back a little bit. Well, I know Italy just set another record just yesterday. But once again, that's the focus for today. And that's what I'm saying is you can't go with just what was yesterday's story, which was the retail sales, and they're hammering it. Now we're, 50 handles off the lows, so from yesterday. So like I said, once again, we look at what the theme is for today. The theme is for today is is now airlines are saying, oh, that we expect a big jump and turnaround. And they're just seeing just a little bit of a turnaround in Spain and Italy, and the market's just jumping all over it. So we'll see how far they can push it for today. So with that, let's go and move into the cross rates. Okay, we have seen the Kiwi yen continue to press even further. Obviously, we've seen the Kiwi and Aussie weaken and add on to a little bit of that weakness. So I think we may be a little bit overdone now. So we may start to see some demand come in. And you can see here, looking at these two closes here, you can see they had a wide wick. And you see where the market closed and fairly decent wick here. So this is where I look for demand to emanate from. And you can see some touches coming across. You see here, here, you see that coming across? Right there. So that's where I would look for demand to emanate or come in. 63.90, that's going to be the support. And resistance. Same thing here. You can see the touches coming across. Let's go right across here. You see the close here, open, close here. See here, that's going to be resistance right there, which is going to be maybe just a hair lower right there, 64.95. Let's go into the euro yen. Well, we did make it to the 1704. We took it out by just a hair. And we're trying to make a stand here. That's actually going to be support right now, 1704. Important for them to hold that. So we'd expect demand to come in on dips to that. And resistance pretty clear as a bell, which is going to be the close from 2 days prior, which is going to be just called 1775. And let's go and move into the euro line. Well, we made it down here. That was that target. Remember that right here at this 170. We talked about this one. I think it was around here, saying, okay, it looks like they want to move down to that 170. Sure enough, they got there. Once we got there to 170, we saw that demand, and then the support Coming a little bit higher. Came in at 71.56 with a high that we were looking for of 73.36. The market has made it back to, well, 73.55. We had 73.36, so it got just above that. The high's been 73.56. We had 73.36 as a resistance for yesterday. Well, yesterday we got to 73.21. We're looking for resistance 36. It's supposed to roll over into today. They're still trying to push a little bit higher. Let's go and take a look on a shorter time frame, see if we see anything else. See the spinning top right there? And that is holding here. You see how this holding up really well? So 73.38. That's probably not even going to be able to get to that. So right here, the body closes on this 2 hour. Right now for today is going to be 73.18. And as far as support, at least for today, we should hold up okay. So let's go right across these body touches here. And really comes in at that low right there. But if they do go and pull back, and they've had a decent little run, it's going to be 72.15. We have seen the Euro Kiwi bounce back. Resistance is going to come in right there. You see here this close here, and that confluences with these with this open, with this close, and with this open here. So right there, 83.72, maybe a little bit of a stretch. Actually, right there, that close. There we go. Which is 83.38. 83.38. In support, we started to turn things around. You can see us pushing higher. Let's find support a little bit closer. Should see some demand just emanate just right there, just below that previous low here. Because we already had a pretty good pullback, a pretty good run up in here. So I would look for it to come in just below right there. You see here? And that'll be just below this low, but right there, which would be 81.76. That's a long ways to go for right now. If you're looking very, very short-term basis, 81.89. I think we can dip just a little bit lower there, right there. Let's just go with that. 81.85. We did see a turn down here from the Aussie yen. After these tight ranges here, almost like a spinning top here. We came down here. We should see some demand come in. Actually, that's going to be a target right there for them to go to, which is 67.43 on the downside. And on the upside, the low for that day, which is going to be 68.34. Take a look at the guppy. Still trading in a relatively tight range. For now, we're going to go right there for the resistance, which is going to be 34.98. And support you can see here with some demand coming across from here and here, 34.30. And lastly, let's go to sterling odd. We have come off the mat, and we had a little bit of trouble. You can see right here where the market's just been sitting here. And that's just good. And you can see here, right across this level, these little 3 bars here, run into the same area, which for right now, that would be resistance, which is going to be 98.68. And support. Yeah, let's go with that. I don't know if it makes it all the way down here. You can see the close, open and close right there. Let's go with 97.60. And that's going to do it for the currencies. Once again, we'll just take a quick look over here on the equities. What we're looking for is potentially for NASDAQ to come and challenge this high, which is 87.09. Maybe if the jobless claims aren't as bad, we may try and see if they can get another push higher. Still a bit precarious. I mean, we're kind of hanging up in here. We can see one more dip, and that may allow this to pull back. We're seeing NASDAQ just come in a little bit. And then with SPOOs, whether or not we can make that challenge up here to 28.09. Crude oil is back above $20. You can see it's been pretty tight day. Actually be rolling into the June rather quickly. Boy, we're still struggling here at the bottom. Resistance you can see right here is going to be right there. See that? 2057. That right now, that's resistance, 2057. But that's all we have. Thanks for joining us here in the European Crossover webinar, and we'll see you in the chat room.